Jake had a what we were just talking about. If you guys just got on, is Jake had a successful exit from his first private lending deal. So congratulations to Jake. Which also, I mean, he's going right into another one, but which also means that he might have a little bit of gap funds. He's looking at deals. So give Jake a call, get to know him. That's how we win in this type of market together, right? So does anybody else have anything though? Any deals on the line? Any questions? Any good deeds that they want to talk about? There's a lot of learning lessons there too. All right. We shall move on. If anybody does have anything, just feel free to unmute and speak up. No shame. Okay, so before we today I wanted to kind of just open it up and talk about kind of being a connector and what is that all about, because we were just talking about that last night in the office, and how you can get into deals without any money and any experience, right? So how do we do that, right? How do we leverage relationships to get into deals? So we'll kind of open it up to the room and start with that topic, because I think it's an important one, especially one coming up soon. So if you guys don't mind, I'll read you guys some notes I had from our call with the NPLA. It's definitely a different conversation when you're listening to the guys who are kind of closer to Wall Street and all where the money starts, or where it used to start, I should say, because it's kind of nasty right now. There's a lot of companies that are shutting their doors. They have to pause lending. Some of them are close their doors. Some of them are very big mortgage companies too that went upside down. And then some recently I found out that they've been losing money for like 3 years. So during this time where the rates were so low for like fix and flip loans, you could get one. If you're really experienced, you could probably get a loan at like 7% at one point. You'll get funded like 90 and 100, 90 of the purchase price, 100% of the renovation budget. But those days are gone. And the reason why those days are gone, again, so that everybody understands the environment and the entire ecosystem that we're playing in, is that the Wall Street investors, so the big buyers, stopped buying the notes that we originate, right? So the fix and flip, ground up construction. The reason why they buy these notes from our capital providers are because it's high interest, right? So there's higher returns, but it is riskier, right, for them. When the capital market started to go down, a lot of them lost their backing, so their investors pulled out. So the point that it was interesting that I want to make clear to everybody is, if you trace it back, very rarely do any of the banks or anyone use their own money. Do you know what I mean? So when we put our money into the bank account, right? All right. We're live, guys. So whenever we put our money into the bank, right, they use our money to go cut loans, mortgages, lines of credit, right? So even at the highest levels, when you talk about like funds like Citadel, right, which is a fund that was founded by Ken Griffin, it's not his own money, right? It's investor capital that they're using. So really, when you think about it, we're all using other people's money, okay? So it's about leverage. And especially in today's kind of market environment, it's no longer about interest rate and points, because if you're worried about interest rates and points, that means maybe you have a skinny deal. And if that's the case, like, we shouldn't be doing skinny deals right now, right? It's about the leverage and who's going to be at the end to close your deal, right? Who's actually going to close your loan. Because that's really been the question when it came to the money. So let me get to my notes to the NPLA. It started off with Jeff Tennyson, who is the CEO of, actually, I don't know if he's still the CEO because he sold, right?
I think he still is.
He's the CEO of Lima One Capital, which is a large hard money company. I think they're based out of New York or I think the East Coast. But so we know Jeff, and I have a lot of respect for him, obviously, because he has a lot of experience in our industry that we're just getting into and we're new to. But he's also been a CEO for many years, right? And managing a large company. And so he is part of like a coaching program. So I wasn't aware of this, but I'm going to be looking into it. It's a coaching program that coaches CEOs or people who are in leadership positions, who are running companies and stuff. So I'm going to get the name of that program. I'm going to find it. I'm going to look into it. If I think it's good, I'll share it with you guys. Because if Jeff's in it, like, we want to kind of follow the footsteps of people who, are higher level than we all are. And he's a higher level than I am. So his notes that I got was that interest rates will continue to stay inflated. Home prices will be flat at best, and borrowers will be economically challenged. So those are kind of like the 3 points that he brought up that he foresees in our near future. Okay, so then he went into about leading, right? Because many of us, have partners, or maybe we have employees or contractors that we work really close with. Either way, we don't do this alone, right? We all have teams in some sort, whether it's contractors or realtors, right? Whoever's on your power team, that's your team. You got to treat it like your team. And so his main point was, let's lead, don't panic, and we have to be steady at the wheel. Okay, so be thoughtful and intentional with your responses, communication, and activities. Lean on your industry, like the NPLA members and your network, which is like this call here, right? And then he made it a point to say, which is very true, that none of us have ever seen this exact situation before, right? So even more so, we should be going through any kind of change in the industry or disruption together. And he said to remember that you have 3 primary audiences who may not all be aligned. And that's your employees, your borrowers, and your capital providers. So if you kind of take that statement, remember you have 3 primary audiences, and you change the audiences to your situation and your company and your business that you're running, then what are those 3 primary audiences that we need to be focusing on, right? Whether it's your employees, maybe your contractors, whoever's on your power team, your investors, right? So, and then lastly, they're talking about liquidity. Okay, so liquidity is big when it comes to the financial institutions, because once they lose liquidity, they can't be in business anymore, right? Especially the big companies like Lima One, right? If they're originating close to like 50 to 100 million dollars in loans per month, then if they don't have liquidity, then they have to have over $1 billion just to hold those loans on their books for the year. Not many people have that kind of money. So that's why we need Wall Street in our space, because Wall Street provides liquidity, right? So when we have the big investors on Wall Street, they come in and they buy these notes in bulk, right? It provides companies like Lima One to get their capital back so they can go originate more loans, right? But since Wall Street's no longer in the game, that's kind of clogged everything up. Now everyone's kind of has to be a balance sheet lender, which means that they're going to lend their money and they have to hold it. They're not going to sell it and recapitalize their money back. Does that make sense to everybody? Stop me if you guys have questions, okay? Because I think I really would like you guys to understand this side. That way you have more understanding about how deals close, and if there's troubles in your closing, what that like, why is there trouble, right? Because everybody has to answer to someone, even our capital providers, right? And even where they're selling their notes to their investors, they have to answer to their investors. And their investors who are buying these notes have to answer to their investors who are probably invested in their fund, so everybody has someone to answer to, right? So their main thing about liquidity is a top concern. Don't delegate it, right? That's one thing we don't delegate in times like these too, is watching your, like, how much cash you have in the bank. And if you need more, you got to get out there and start aligning yourself with the right partners, maybe a strategic partner, or get out there and start raising some money. So he reported, and this is pertaining to loans, but he says everyone should ask themselves, do you have good cash reporting, good cash forecasts, right? 3, 6, 9, 12 months out. How many months out are you? You need to know your runway, right? Especially if you're flipping houses, because there's no cash flow in flipping houses. Okay. And typically if a business doesn't have cash flow, then it's not a business yet. It needs consistent and residual and predictable cash flow. If you're flipping houses, there is no cash flow, right? So we have to make sure that we have enough liquidity to sustain, in case maybe we can't sell the house and recapitalize, right? Maybe we can't sell either, because now it's going to be a strong buyer's market on the back end, right? So just be prepared. And then John Hornick, this is the last thing I want to talk about. He's our attorney, and he closes the majority of hard money lending companies' loans. Actually, he just said that they close about 1,000 loans per month. When we started 3 years ago, they were at 500. So the space has grown tremendously. And he has all the data, okay, because he knows what loans, how many loans came in, how many actually closed, right? So according to his data, in June, they were down 35% in volume than normal. Okay, that's a pretty big dip. And of that volume, right, only 25% of that didn't close. So in June was a pretty dry month, but he says it is now moved to 18% of the previous volume, and 8% that haven't closed of the existing volume. So he said that the data shows the market is starting to stabilize. Borrowers are accepting new prices and terms, and that's us on the call. So, and I think that's true, because there was a lot of sticker shock. There was a lot of people sitting on the sidelines, not knowing, maybe we should kind of wait a little bit, which I think was a big reason for the volume that decreased. Plus, whenever things change so fast, like interest rates, it changes everything, right? Appraisers will have a hard time finding values, which they've often had hard times finding values, but especially in markets like these where it's very unpredictable. So according to John's data, it looks like we're starting to kind of stabilize, but we don't know, because we have elections coming up. We have another Fed announcement coming up next month, and that seems to kind of, take things to wherever. I was saying, like, why do we have to announce it? Let's just kind of not announce it. Let's see how that works. But so we don't know what it's gonna look like at the end of the year. But like Jeff was saying earlier, is we need to behave as if we are in a recession, because we are technically in one. So he said, now we do have to behave, start shoring up maybe inefficiencies in your operations or how you do business. Like, now's the time, let's spend some time doing that while the volume is slowing, and before everybody gets the confidence to come back in and play. Right. So that was an NPLA update. Alex, did you have anything that I didn't cover? You're muted.
No, I think you did a really good job at covering, I think, most of the basics. I think one of the really good things, did you go over Tennyson's PowerPoint at all? Did you make some of those points points.
Yeah, I did.
Yeah, I think that stuff was really good. But no, I think you covered it really well, man. But I will say, just to add on to it, guys, I think right now is the one time to really work on your relationships, whether it's with your lender, your private money lender, your realtors. Like, I think right now is the key opportunity to go out and secure some more private capital, probably. Like Jacob's got some money, and because I think that there's going to be a lot of investors, I think, that step away and pull back a little bit. So I feel like there's going to be some more private money available, more deals are going to be available, but everyone's going to want to work with the people that they know can close, they know they can get to the finish line, right? So, and people that they like and trust. So I think right now is the time to reach out, really nurture your relationships with everybody you're working with that's helping you get deals and close deals. And then, I definitely and whoever you're using as a lender, make sure you have a constant pulse on them when you're getting ready to go acquire, right? Because you don't want to be running your numbers and then, you put an offer in, your EMD goes hard or something, and then leverage is cut by 5%. And you could have found out by just reaching out before you made the offer. That's all I got, guys.
Thanks, dude. Yeah, and actually that was one thing they did say lastly was now is the time to be speaking with your investors regularly, right? So if you have private investors, like making sure that if they have any concerns, maybe they might be calling you because they know that the market's going up, interest rates are going up, how's this going to affect them, right? So now's the time to speak with your investors, let them know that you're still here, right? Everything's okay. And everything's not okay, now's the time to talk. If everything's not okay, now's the time to talk about it, right? Not later, because problems only get worse with time, right? So one thing that Chip Cummings from Northwind Financial kind of ended the call with, which I'm so glad that he did, because it was a little kind of doom and gloom, but he was saying, he's like, guys, I've been through like so many different cycles, 37 years, in the industry. And he was saying, this is honestly where it gets fun. And you can just see the genuine smile, and he's just a genuine nice guy anyways, but he's like, this is when it gets fun. And he noticed that for them, they're seeing an increase in questionable deals. So like investors who are fudging numbers to make the deal work, right? So but they haven't seen much default. So to him, like, and I think I get this feeling around people who have been through different crashes, right, or recessions or anything, is that it's actually exciting, right? And I used to say, it's like, man, I haven't been through the down of a large recession like in 2008. I came out the back end, and it's been great times since then. But I always wonder when, if shit hits the fan, really, and it really hard and fast, like, I want to see what I'm made of, I've kind of been waiting for this. And that's why it's exciting to me too. It feels like my Super Bowl. But anyway, so that's an update from the guys at the NPLA. There is still some no buyers out there. So you'll see a few companies that they might have locked in a line right before everything hit the fan. So for another like 6 to 12 months, they might still have high leverages and lower rates. But when their bonds adjust or when their lines adjust, then you might, then it's going to correct to what the market's demanding. So just be on the lookout, stay close with all your relationships. Oh, I want to tell one more story. About 2 years ago, almost 3 years ago now, Alex and I were at a Scottsdale event. It was Pitbull. And we saw a friend of ours who I just met at the time. And their company was an up and coming hard money lending company based out of San Diego. And I'm wondering if I should say the name. Probably not, huh? Well, huh? Yeah. Okay, so I don't know if you guys heard of a company called Triumph United. Was it Triumph Capital? Yeah, Triumph Capital. So maybe like 3 years ago, they were kind of in the position that we are in now. Young, hungry team, and they were doing really well, and they're making a big noise. And I remember we were speaking to their CEO at the event, and had a great conversation with him. Super nice guy. But at the end, he said, I would put my team up against any team. He said, that's how confident I am in us. And when we left, Alex and I were talking. We're like, man, I actually have a lot of respect for that. But when COVID happened, they did get stuck. And they went upside down, and so they're no more now. Like just overnight, gone, boom. And so what that tells me is that nobody's invincible, right? And now we're being mentored by the best, like John Hornick is a mentor for us. And, we would ask him, like, John, like, what happens to companies like that go upside down? Like, what is the major fault? And he said, they didn't have the right relationships. That's what he said. Caught me by surprise, to be honest. But I said, well, what do we do? Because I was telling John, I was like, hey, we're in the same position like they were, young, hungry team, right? And I said, well, what did they do wrong, or that made them go upside down like that so quick? And I was expecting to say, oh, maybe over leveraged, or not enough liquidity. And to my surprise, he said they didn't have the right relationships. Because that is true. You have the right relationships, you're gonna make it through. So that's why calls like this is very important. Okay, so just to start conversation, now that we're talking about, times might get harder, maybe there's less capital out there to place into deals. How do we get into deals? Like, what can we leverage to get into deals? Does anybody have any ideas? If you have no money, no access to money, what are our options?
Hey, Cory, I'll jump in, man.
Oscar.
What's up, brother?
Hey.
So, this is actually a topic we're going to be talking about in September. So I think it's a great time to kind of ease into it. But a lot of the things that we do out here in Southern California, because Southern California is a lot like Hawaii, right? Where prices are really high and margins are different and that type of thing. So things that I've done is I've partnered with homeowners. I've joint ventured with homeowners. So I come in with minimal costs and monies to be able to just fund the repairs and do those types of things, with a really strict JV on what my role responsibility is, what their role responsibility is going to be. And that way, now our liquidity stays higher because we have to use less money to come into a deal, and it becomes transactional, right? So that's one way of approaching it. The other is, man, we're really into wholesaling right now, because there's people out there that want to buy in different areas. So, I'm looking outside of California as well to see what the possibilities are to wholesale things off and just build a wholesaling mill, if you will, because it's for us, well, I love the story you shared about that company. I hate that it happened to them, right? But I love the story behind it, because everybody on this call, you guys have to be prepared to really flip the switch and pivot on a dime, like instantly, like we need to make this change, and move forward, right? So we were fortunate enough to be able to do that over COVID as well. And, our team in Hawaii, 50 plus transactions over COVID. Our team in Tampa, same thing. Team in Riverside, same thing. So it's one of those that you have to stay agile, and I don't want to say have a crystal ball, but you got to kind of have a crystal ball, right? And navigate what's happening and so forth. But I think right now, from my perspective, my personal view is that we need to really step into that creative acquisitions, doing subject twos, doing some partnering with sellers, and doing those types of transactions, because it's the best way to get in with the least amount of money. So,
yes. Thank you so much, Oscar. I was so glad that I saw you when you popped on, because I was like, this is going to be perfect. And I'm glad you spoke up a lot back, because, and you did touch up on, I did pass up on one thing. One point that they made was that you kind of alluded to was stay in the trenches with your team. Now is not the time to manage from an ivory tower, right? And that came from Jeff Tennyson with Lima One.
Yeah.
And that's so true. And because especially in times like there's wartime leaders and peacetime leaders. We're just talking about this in our office. And like some people were just born to be wartime leaders. Some people were born to be peacetime leaders, and like you think about Steve Jobs, right? That guy was a pioneer, a visionary. He was a wartime leader, and so much so that when the company started to mature and they have a board and they have shareholders, they fired him from his own company. Yeah. Why? Because he's a wartime leader. He wasn't built for peacetime. And then they realized that no, they still need him, right? It's still wartime. Every day should be wartime. If you're a company that's pursuing growth and if your goals are the goals of the company is set correctly, where you're serving your customers and your clients and your employees rather than your shareholders, then it should be wartime. By the time a company matures and it has all that type of bureaucracy and stuff, like I think that's when companies start to die, because they're not growing anymore. You need wartime leaders, especially in times like these where it's very questionable, right? So we have to ask ourselves, like, would a wartime leader be calling the shots from an ivory tower? No. Would people in hard times want to still follow them? I don't think so. So that was a great point that really hit home, because when it is hard times, like we get through it together, and I think Oscar, that's what you're alluding to too.
Yeah. I love that point, man, because it's real easy to get disconnected, right? And focus on a bigger picture type thing and forget about what goes on at the ground level. So no, I love that. It's important to be able to navigate both sides. And another thing that goes into that is, if I put my military hat back on, right, is that most often the ones that you're going to follow are the ones that are in there with you, number one, and number two, that take care of you as well, right? So this is a people business, it's relationship business. So you need to be able to build those relationships, nurture the relationships, all the care and feeding that goes into it, taking care of the people, right? Like know their families, know what's their circumstances, know all about them, so that you can actually genuinely care, because that carries way more weight than anything is ever going to carry, right? So when you can put that together and you're able to go into the trenches and actually do this business and do everything that you have to do, so you lead from the front, right? Lead from the front, then people are going to be behind you 100%. So
love it. I could talk about leadership all day. Like I'm geeking out about that right now. Yeah. It's a beautiful thing. It's very fulfilling position to be in. Like, and we want everybody that even is around us, right, to at least aspire to be, a leader, and all of the qualities that come with that. Because like in the Go Giver Leader book, they say like gifting leadership is one of the final steps in becoming a leader. Is gifting that. That's your legacy. Yeah. Right.
One of the things Melina says all the time is leaders grow leaders, right? Yeah. They create leaders. And so that's a big deal. Another quick note on the chat. I noticed Marianne put on, I don't know why she doesn't just come on, but she put on there that says, company needs to innovate and transform or die. And that's something that Joel shares with us all the time. So.
Yes. Yep. That's like Jeff Bezos, right? Amazon, every day is day one, because he said himself, it's like the moment a company stops pursuing growth and growing, it becomes obsolete and then dies, or it gets disrupted. Yeah, so yeah, it's great lessons. But so Oscar was talking about JV partnerships, getting into deals if we don't have any money, getting into deals with JV partnerships, right? Yeah. Powerful strategy. And you also mentioned sub 2, right? Even being the connector into deals like that, maybe you don't have the deal, but maybe the person who has the deal, right? And then maybe you don't have the money, but the person who has the money, right? If you can connect the two, you know, if anything, I would say that you need to be a part of the deal, because your investor who's bringing their money into the deal doesn't trust the probably the investor you're teaming up with. They trust you, right? And that's your responsibility. So if I was their investor giving, my money to someone I don't know, I would want my guy who connected me in the deal, vested in the deal. Like, that's my security, like, because if he wins, then I win. If we lose, like, we all lose, right? So I think if you're a connector and you're even just connecting the deal with the money, you should be a part of that deal. And if you're the investor who has the deal that needs the money, and you have someone bringing you their relationship to the table to give you hundreds of thousands of dollars to close the deal, then you give them a partnership. You let him be vested in the deal. Because one, you probably wouldn't have closed it without him anyways, right? And two, you want them to have a great experience so that they bring more friends. That's what this is all about. Right, Oscar? You guys been raising private capital and have way more private capital than most probably on the call here. Like, isn't that what it's all about?
It is. It's the relationships, man. And another thing is, I think for everybody on this call that's already doing this and going through it, look at it from the opposite side of what Cory just described, right? Because he's saying, hey, if you don't have the experience, right? You on the call don't have the experience, then connect. But if you do have the experience, then find the connector and build relationships with those connectors that are going to bring you more transactions, right? And bring you more relationships to the table. It's super powerful to be able to do that. And it's the relationship that Cory and I have and our teams have, right? That we're always looking for opportunities for each other and connecting the dots and doing things. And sometimes they work, sometimes they don't, and that's okay, right? But the cool thing is that if I don't know the person, then I may know somebody that I need to bring to the table for Cory or for someone else, right? So I can still make a connection somehow. And sometimes, man, I tell you, when I got started in this business, right, I wanted to do it all. Like, I got it, I learned it, I'm gonna go. Huge mistake, right? It's like, let me connect, let me be a little sliver in it. And I settled at some point, into like, I don't need to make any money. I just want to learn from the process. And that's my pay, right? Is learn through that process. And maybe that built credibility for me, built some experience and other things that allowed me to continue to grow. So there's so many different ways that you can do this without having to have the money available to you to get in the mix and do things, right? So it's super powerful to build relationships and really dive into that.
Yes. And that's why, like, even if you're in, let's say you go to a mastermind, right? Maybe the goal is to attend it regularly and get to know every single person in that group, because I bet you there's a deal waiting to happen in that group. Just somebody hasn't connected it yet, so be that person, meet everybody, find out what their needs are.
Another thing with that is that sometimes you just need, I just saw Daniel's post that said, hey, sometimes, we're stuck in our own little sphere and we miss things, or we don't have a fresh idea. So and when you open it up to other people, then that fresh idea prompts another conversation, another process, another idea. And then next thing you know, you have this whole creative way of acquiring something that you never would have thought of being able to put together, right? So it's, you got to bounce the ideas off, man. It's pretty powerful stuff.
Yeah, absolutely. I talk about like fresh eyes and fresh mind. We just brought on a new person. Her name's Marina, and she's 19. She's just getting started. She's gonna be an administrator with us, and the questions that she asked, she's very smart. It was valedictorian. Like, I don't even know how we got this girl. It's just Layla's hula sister, but we're so lucky to have her. But when she's asking questions, I'm like, oh wow, okay. Now I understand. Like, now I have to go back to the very basic. It's helping me become a better maybe teacher, because I really have to stop and go back to the basics, even with the vocabulary, having to define certain words, and I know exactly where she was, because I was in Oscar's office 11 years ago, guys, the same way. I didn't know what mortgage meant. I didn't know what escrow was. I didn't know short sale, foreclosure. I didn't know any of that.
Dude, that still makes me chuckle, man. That still gives me a giggle.
Yeah.
So
I
awesome.
got so
Where
many
you're at now.
weird, like goosebump stories with Oscar and Melina and the whole team, and but it really, everybody starts somewhere, right? But it made me have to, I think it's making me a better. It's making me retain everything a lot better when you have fresh eyes, right? So when we talk about deals and in times where like there's going to be a lot of deals, right? So what is going to be valuable? Like what type of value can we offer? And I think if it's finding deals and funding deals, right? If you got a deal, now the job is to go find the money or find someone who knows someone who has the money, right? And vice versa. So if as we change more to where now there's a little bit more deals, right? It's shifting a little bit more towards a buyer's market in most markets across the nation. So are the deals going to be as valuable as they were before? Maybe, depending on how good the deal is, right? But like on average, I think the value is shifting to the money, right? So if people who have money and want to invest, like now's the time to start going through the Rolodex and making those calls, right? And the reason why we're calling now is because we're smart, savvy investors. We feel that the market is softening. If anything, there might be a pretty deep correction, maybe not, but we're positioning ourselves to take advantage of opportunity, right? So that's why now is the time to go through the Rolodex and start making those phone calls. And if you need help, right, maybe reach out to somebody on this call who you've built a relationship with. Hopefully we're not just showing up every Friday and just staring at each other's names, like let's get to know each other, like it's been 2.5 years already. So let's do business, and let's start finding each other's needs. But really, I think the value is going to be in the money, right? And so a couple calls ago, I did a presentation on how I handle a meeting with a potential private lender, right? And what my philosophy is behind it is, not selling. We don't have to sell. There's no need because we have a better product to offer. So what value do we give? We give education and opportunity. Okay, we have to educate them on what is the fundamentals of investing, right? And because sometimes they don't even know that, right? It's just risk versus return. What's my risk? What's my return? And then going into why investing against real estate privately is a much more secure investment that pays exponentially higher rate of returns than most traditional investment vehicles out there. We win on both sides, guys. We don't even got to sell. We just have to educate because it's a no-brainer, right? So I think that the value is in the money. But if you don't have money or people who that have money that want to invest, then now's the time to start building those relationships, right? Being on these calls and then maybe messaging each other, right? Putting your email in there and attending the in-person meetups. So, because when you're going to meet people and everyone's going to have a different need, right? Someone's going to be from Tennessee. They need, 50 grand. It's like, well, I know a guy in Washington named Jake. He was on Coffee Talk saying that he's got money. Like maybe I could put those two together, and then maybe I can get in a deal. It's like, yeah, like that's how it works, And if you think about it, connectors are the highest paid. When you look across the board and you look at the highest paid professions, and you look at who they are, they're connectors. One of the highest paid professions is a fund manager. Okay. And what is a fund manager? A fund manager is a connector. They bring the money, right? People give them the money and they go and invest it on deals where people bring them deals, right? Or they put it in the market. So they're just a connector. Everybody pretty much is a capital allocator on this call, right? We allocate capital. People give me their money and my job is to get them a return for them and protect their money. And that's our job here, right? So does anybody have any other ideas? I know we have Kamahai on the phone, and you guys been diving into sub 2. We got Keone. We're talking about a scenario where, let's say we got no money and no access to money, right? How do we still play?
Hey, Cory, I had a quick question. Curious to get your input on this. So kind of following up what Oscar was saying regarding subject to. So I would think that mortgage lenders would probably be more inclined to relax some of the rules, maybe like on the due on sale clause, something along those lines. So now may be a good opportunity to pursue those more creative financing deals that lenders may have been hesitant to jump into in the past, whether it be subject to or a mortgage wrap. I'm curious to see or hear from you. Have you heard from mortgage lenders? Like, do they feel like you feel like they're relaxing their rules a little bit?
No, I haven't heard from mortgage lenders. Perhaps if there's somebody on the call that I know we do have some, but I honestly don't think they would relax their guidelines on that. I don't think they'll change that. I've never heard of anyone actually getting a due on sale clause though. Has anyone here on the call?
No, never.
Never. Even with all of Oscar's experience, like never. So
yeah, never. I do actually during this time have heard that lenders are actually tightening up a little bit. So like, because interest rates are rising, less people are borrowing money. Some lenders are looking into their old files to check for ways that they can increase revenue. And so I have heard of, like in our community, a bunch of people that have more recently started to get loans called due. So that's just something to think about.
Wow, yeah, that's not fun. Well,
so there's
ways
around all this. There's ways around all of this, so it's all manageable. So I love. Thanks for the heads up, because honestly, yeah, 12 plus years, I've never had any such issues like that. Doesn't mean it's impossible. It's just been highly improbable at this point, right? But love the insight on that, because it just means that you have to get you have to set up different ways of taking title and doing things. Yep. So right, so
100%. I don't say that to like create any hesitancy for people that are doing it. There's ways around all of that stuff. So like in our contracts that we do sub 2, we'll write in an addendum that if the due on sale clause gets called, we have a process that goes into place. We'll literally quit claim the property back and repurchase it on an agreement for sale or a land contract, which satisfies the due on sale. So there's things that you can do that are workarounds.
Yeah, we take a different route. We'll put things into trusts so that the trust is now transferable within the trust, and that's never visible to anybody anyway. So it could be the Cory trust, and that owns the property, and Cory they got the borrower, so it's all good. Nothing changes there. It's just who owns the trust inside of the trust changes. But other than that, yeah. So there's different ways. So I love that though. It's good stuff.
Yeah.
Hey, Oscar, I'm here. Sorry, can I add to that? Because we've been doing a lot of that now. Trying to multitask here. The other thing I wanted to provide to the call is also, it's good to build that relationship with that lender. We make it like they're the enemy, but we had a couple that we did subject to, and what I did on my side is just really build that relationship with the lender, that we're getting it taken care of, and again, this is with the homeowner as part of that conversation. And you'd be surprised that because all they want is their money. Where it's coming from, they don't give a crap, right? They just want the money and make sure they get the money. So for me, what I've done is that hold them close to you, the lender, continue having conversation with them, and then after a while it's like they're good to go, until you're ready to do whatever you need to do with that project. That was my input on that, and that happened to a couple of our projects and went well.
Nice.
Yeah. Thank you so much, Marianne. Because like, you know what? I mentioned this before. The first deal I did was a wholesale deal. I wholesaled it to Jonah Colgan. And he structured it as a sub two, right? So and I remember him, he called the bank. Like he was very upfront with the bank actually. And to this day, I don't know why he did that. So, but it seemed like the same reason why you know you're in touch with the lender, right? You're in communications, you're transparent with them. They just want to make sure that the mortgage is gonna get paid, right? Like so, but I don't know, maybe it could go either way. You call them, they'll be like, oh, we're gonna have to underwrite you right now, you know, or I don't know. So but I'm meaning to ask Jonah, what was his thinking, like, because we could have lost the deal, right? It was a nice deal for him, made like a couple $100,000 on it. But you know, one thing we're talking about raising money or starting to talk to people who might be interested in investing now, right, is because when we look at holding capital, like right now, it's costing me a lot of money to hold a lot of money right now, but it's okay, right? Because I see it in a sense where, okay, if we lose maybe 50,000 holding on to this money for the next maybe few months, right? Like, yeah, that's gonna suck. But also we're looking at if there's opportunities that arise, which they already have, you know, Oscar's team and our team are going to be teaming up potentially on a couple of big deals. And I wouldn't have the ability to even, you know, I want to call Oscar, you know, like it's a lot of money that we have to put up, both of us. So if we don't have that ability, I wouldn't have that opportunity to get in there and team up with Oscar and Melina. And that would cost me more in opportunity costs than the 50 grand I might have bled holding on to the money. You know, and so that's just an honest real life example that, yeah, even if we are holding on to cash and it's costing us, I know that it's going to cost us more because there's always opportunities and real good opportunities that if we don't have the money to pounce, then that costs us money too. We just don't know it. If anything, opportunity cost is even more dangerous because a lot of times you don't know that you lost out a lot, right? So we have to put some weight to opportunity cost. Does that make sense to everybody? All righty. Does anybody have anything else you want to touch on? I mean, we only had a little bit of time to go over, you know, getting into deals creatively, but the real point that I want to make after the conversation was that let's be a connector, right? Like John Hornick says, you know, like the reason why those guys didn't make it is because they didn't have the right relationships. Let's not be those guys. Okay. Let's have the right relationships and let's get through any good times and hard times together. So I hope everybody has a great weekend. Happy Aloha Friday. We'll see you guys next week. Hello, everybody.
See you, Cory. Thanks, buddy.
Thanks, Oscar.